high-selling models. In the light commercial vehicle segment, we won some new business for steering, resulting in a higher growth than industry. And in the medium and heavy commercial segment, the increased share of business and higher pack value resulted in our growth being better than industry growth. In the farm tractor also, we are happy to say that finally we caught up and grew better than the industry because of our capacity in hydraulic power steering, which we increased during last year, and more penetration in customers on power steering. And the higher growth in two-wheeler segment was due to the strong growth of friction materials, where we have started supplying the high-performing two-wheelers. In terms of market segment, 67% of our revenue was from Indian OE, and international segment contributed about 22% of sales. This is broadly what happened in Q4. I will now hand over to Harish for his specific comments on Q4 performance of the group.
Thank you, Mr. Ganesh. Good afternoon, everyone. As Mr. Ganesh explained, Q4 was a good quarter for the entire automotive industry because the demand was much higher than what any one of us had expected. Even though there were significant increases in raw material prices, the operational improvements carried out by the companies and the lower employee costs and the higher volumes helped our margins. The group, at a group aggregate performance, the total revenue grew by 38% in Q4. The revenue from the domestic OE business grew by 46%, with strong offtake seen across all vehicle segments. The revenue from international customers also grew by 27%, supported by strong offtake for occupant safety products and new business for steering products. The revenue from the aftermarket segment also grew by 30%. The EBITDA margin improved by 70 bps on account of lower employee costs and fixed cost reduction. However, the aggregate PBT loss for the group in Q4 was about 46.6 crores compared to a loss of 4.5 crores in the Q4 of last year. This is largely due to the warranty provision for Rane NSK that I will talk about shortly. Coming to Rane Madras standalone, the revenue increased by 47%. The sales to Indian OE customers grew by 56%, and sales to international customers grew by 74% due to the commencement of supplies to a new customer for steering products. And the sales to aftermarket increased by 30%. The EBITDA margin declined by 257 bps due to the increase in material costs. The light metal casting business, India business, is seeing good traction with new orders. In Q4, the business won a new order of about 9 crores per annum from a European customer. This is in addition to another 32 crores that was secured in the previous quarter. Coming to the light metal casting business in the US, obviously the COVID, as communicated in some of the earlier calls, has had a significant negative impact in 2021 in the US market, and it did not spare LMCA as well. In addition to loss of sales of existing business, a couple of new program launches also got delayed. The operational performance of the business has improved with the introduction of PQM practices. This was evident from the significant reduction in expedited freight costs, repairs and maintenance costs, and consumable and tooling costs, and the cost of poor quality. The US sales in the current year appears to be coming back strongly, and we are also launching 2 new customer programs. As mentioned in the past calls, the board of Rane Madras is closely reviewing this business, and we will update our outlook on this business after the next board meeting in July. Coming to Rane Engine Valves, the revenue increased 29%, supported by robust demand from Indian OE customers. EBITDA margin also increased by 157 bps. Lower employee expense helped offset the material cost increase. The market decline in COVID, impacted the timeline of the turnaround plan. However, we have reduced the break-even sales through operational improvement and cost reduction measures. We are also enhancing the order book position. Coming to Rane Brake Linings, we experienced a 27% increase in total revenue in Q4. The OE business, domestic OE business grew 20% and the aftermarket grew by 29%. As mentioned with the other companies, the lower employee costs and significant savings in fixed costs helped mitigate the increase in raw material prices. Coming to the joint ventures, Rane TRW, the revenue grew by 41%. The growth was supported by strong offtake and higher share of business for steering products in the Indian commercial vehicle segment. The occupant safety products experienced higher offtake from international customers and better fixed cost leverage resulted in margin improvement. Coming to Rane NSK, the revenue increased by 43%. This was supported by robust growth in the served models, largely Maruti, and better fixed cost leverage resulted in margin improvement. However, this has been a very difficult year for us due to the continued warranty claims on top of the COVID impact. Warranty costs have been provided based on the technical and statistical estimates of NSK experts and are expected to cover future claims as well. We are reasonably confident that all root causes have been identified and appropriate countermeasures have been put in place. However, the company needs at least another 6 months of product maturity in the market to ensure that no residual causes exist. At this time, our view is to provide for the worst and work and hope for the best. The second wave and resultant lockdown has definitely caught us by surprise. This has impacted the growth momentum that we were experiencing. We are still hopeful that the demand environment will turn around during Q2. Schedules from international customers are calibrated based on the chip availability. They prioritize the models differently in various geographies. We are largely seeing sustained demand. There are few products and programs where we are seeing some reduction in schedules, mainly because of the chip shortage. We continue to experience inflationary pressures on material costs. Our teams are working with customers on the price recovery, which will be key to protect our margins. We continue to prioritize the safety of all our employees and continue to focus on cost management to navigate the challenging times. With these remarks, we will now open for any questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Shyam Sundar Shriram from Sundaram Mutual Fund. Please go ahead.
Yeah, hi sir. Good evening. This is Shyam from Sundaram. Thanks for taking my question, sir. At the outset, I think we have performed relatively very well at the operating level, given all the challenges on the commodity inflation and ramping up the challenges in ramping up our production per se. So my question firstly for Rane NSK. If you see, I think we started providing from F19 third quarter onwards. I think we provided more than 300 odd crores there in terms of the warranty provisions. How much? What is the total revenue that Rane NSK has recorded from the sales of these models that are now seeing these warranty claims over a period of 2 to 3 years? What is the total revenue pie, sir? Because just trying to understand how much more can the provisions happen, if at all. What can be the worst case provisions? So from that perspective, just trying to understand what is the total sales for these models from an NSK perspective.
Shyam, we understood your question. We don't have the exact answer, but I'll just hazard a guess that it will be the revenue. This warranty cost, as you said, is about 300 crores that has been provided for, that includes the future provisions as well. The revenue is estimated to be around 1,200 crores for till date, yeah. So about 1,200 crores.
Okay, understood. So of that, and this 1,200 crores, I mean, we also made some changes in the product specifications in terms of to mitigate the issues that came. So this 1,200 crores is the sales that we did for these models prior to the changes we did, sir.
I think during the period. That's what. So we don't have the exact numbers, Shyam. So I know you're getting into a lot of details. So I don't want to give a number that's wrong. So maybe we will review this and come back.
Okay, sure, sir. Thanks for that, sir. And from a TRW perspective, on the export side, very continuing a good performance there, sir. I mean, on the last 9 months, we have held the export revenues at an average 110 odd crores. I thought the fourth quarter could have been slightly better, but is it because some chip shortages impacting the Korean customers per se? So is it getting better as we go into the second quarter onwards? How are you looking at that side? Because we are also winning orders there. I mean, this quarter also we have spoken about a new order win of 48 crores. So how to look at the export revenues?
Just hold on 1 second. Yeah, so Shyam, definitely the chip shortage has impacted the revenue. Otherwise, we could have done more, and we are hopeful that from Q2 onwards, the situation will slightly improve. And therefore the numbers will look better, but at the same time, it's not near where the peak potential is. There is continued loss of revenue because of the global chip shortage.
Okay, understood, sir. And this new order win is also from the same Korean customer, sir, or is it to we were also exporting to our parent also?
Yeah, so while largely it is the Korean, but in both Q3 and Q4, we have also resumed. We have also started supplies to our partner, and many of which is also going to Europe. So that is steadily picking up in terms of top line.
Understood, sir. Understood. Best wishes for that, sir. One last question on the Rane Madras perspective. We have also provided for the 62.5 crores impairment provisions to RPDC. So just trying to understand, because last year also we provided around 38 crores. We don't from a management perspective, we don't expect this business to revive because we have been continuously providing for the support that we have given during the year at the end of the year as a prudent measure. So from the management perspective, how do you think of this business? You think it may not revive, and that is why we are providing for the for the support we have given during the year?
So as I told in my earlier remarks, Shyam, we will give you a full update in our July investor call on the way forward. But obviously, because of the lack of increase in sales in that business over the last 2-3 years, and coupled by the impact of COVID, the top line, further dropped during last year, as you know, from about 24 million to 17 million. And therefore that has, forced us to take these impairments. As I also mentioned, the situation is definitely improving in the US market, and obviously from a top line standpoint, it cannot be worse than that, what we saw last year. And in addition to that, there are some new programs that were supposed to launch in Q4 of last year that got delayed because of COVID. Those are still there. It's not that those programs have gone away, and those programs will also start coming back in the coming quarters. So we will share more with you during our July call on the future of that business.
Thank you. Mr. Sriram, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Sanjay Shah from KSA Securities. Please go ahead.
Good afternoon, gentlemen. Thanks for the opportunity. So my question was regarding this NSK, our warranty issue. So this has been long, 2 years we have been facing this issue. So now what is the status? How long you see that coming in, and what steps are we taking? And have we lost this product to our competitor, or still our OE people are prefer buying from us, the said product?
I'll answer the second question first. The answer is no, we have not lost any business to competitor. The product continues to be supplied, and there is still life left over the next few years. As far as the first part of your question is concerned, as I said, whatever this provision that we have made includes future complaints that will come. So the financial provisioning includes some more warranty problems that will come in the market. But what comes in the market are all older cars, so we have taken various countermeasures in terms of changing some parts of the steering design and manufacturing process, etc. So those changes have all been completed some time ago. So we are hopeful that in future, as I said in my remarks, all root causes have been identified, and in future the problems won't be there. But we will continue to have some claims coming that belong to the past, but which have been financially provided for.
My second question was regarding our Rane Madras. We have a market cap of around 550 crore, and we are impairment of around 100 crore, which we feel a bit scary. And we have many non-core assets also lying with us. Cannot we utilize that to enhance the shareholder value or use in the capex?
So as of now, there is no intent to look at any monetization of land, etc. And as far as the future of this business, I think we have coming through 2 extraordinary years on top of a turnaround situation that we were already struggling with. So we will come back on what the future direction is in the month of July.
The last question was regarding how do you see the market ahead for our industry, especially commercial vehicle, for this year and next year?
So it is very difficult to predict, Sanjay. As you know, we are extremely volatile situation with we've had significant lockdown. In fact, we had to even postpone this investor call because Tamil Nadu has been under very strict lockdown till last week, and even now we are in lockdown, but some small relaxation has taken place. So there is a lot of uncertainty. But having said that, we still believe that there is demand in the market, and the lockdown has not allowed the demand to be fulfilled. And if the wave 3 etc. doesn't happen and the country opens up and vaccination also continues in a significant way, we believe the coming quarters will be better.
What is the rationale behind believing that things should improve, especially in commercial vehicle I want to talk? Because we need to understand, is that pent-up demand you see coming in, or you see some economic activity which can push the sale or any?
The combination, so if your question is specific, okay, I was answering for all the vehicle segments, including passenger car, etc. In CV, the rate of pickup in demand will not be the same as what we see in passenger car or two-wheeler. We have to wait and see how the economic activity improves. I think obviously that's a key driver for sales for the commercial vehicle, especially all the infrastructure projects, etc. So that will be one element. But there is also some demand because, as you know, the CV market is a cyclical in the market, and after the peak of 18-19. The market has come down significantly, and it had bottomed out. So therefore, a combination of some cyclicality, uptick in the cyclicality of the inherent the business and economic activity can improve.
Thank you, sir. Good luck to you. Thanks for answering my question.
Thank you. The next question is from the line of Manan Shah from MoneyBee. Please go ahead. The current participant is kept the call on hold. We'll move on to the next question. The next question is from the line of Ashwin Agarwal from Akash Ganga Investments. Please go ahead.
Good afternoon, sir. So we had a 90 crore order from Nexteer for supply to General Motors for rack and pinion. Can you update how much we have supplied this year, and this coming year, how much are we going to supply out of this?
Do we have the data? I mean, obviously, in my Ashwin, as I mentioned in my opening remarks, Rane Madras, the export growth in Q4 was 74% over last year. So obviously, as you're aware, that is driven largely by that order that you are referring to. That business has also been impacted by the chip shortage. So the current quarter, we are not hitting the projections the customer had given because they are facing chip shortage issues. But it will pick up. So I'm trying to see if we have the exact numbers available.
So this year we should be able to complete the value of the order, and we were also in discussion for further orders from Nexteer for some other customers. So any update on that?
Correct. So, yes. So this order will continue. Just hold on 1 second. Value order. 21 is 55. Okay. So one information that I'm able to pull out is that the Nexteer business last year for the financial year 21 was 55 crores. Largely driven by this program, which started somewhere in Q3 of last year. And as you said, that we still believe that 90 crore order, the full impact will be seen in the coming year. And the second part of your question, yes, we have won some more business with that same customer, and some of those programs are launching during this year.
Yeah, that is a good news, sir.
Yeah, but of course, as I said, the steering order that we started, while we were supposed to do 90 crores, there will be a chip shortage impact. So there will be some reduction to what was planned earlier. It all depends on how the chip situation is in the coming quarters. But overall, we will see a growth on the export.
Okay. Can you give us a number for ball joint exports? What was the value of ball joint exports for Rane Madras for last year, and what is the targets for this year? And we were also in discussion with Daimler and many other customers for export business. So anything has happened on that front?
No, with Daimler there is no significant progress. But with next year, I don't know. 1 second. We don't have. How much? Okay. Yeah. So the ball joint export is around 45 crores, and it will grow to about 65 crores is the estimate. And what was the other question that you asked?
No, we were in discussion, I said, with Daimler and many other customers for a large export business of ball joints. So anything is happening there?
No, nothing significant has happened. We have one with another customer for ball joints during Q4. I think that also we had shared. We are not naming the customer, but yes, we have one contract, but it's not a very large order.
Okay. So lastly, coming to hydraulics, we had a target few years back to reach 150 crores, led by CVs and tractors, and we have made a few new products and we have launched in the market. So what has been the revenue from hydraulics in last year and what are the targets going forward?
Yeah, so that 100 crore target remains. Last year we did about 64 crores.
Okay. And by when should we be able to reach, and does this have any export potential?
There is very little exports. It's largely domestic, farm tractor segment based. So hopefully the target should be achieved in the coming year.
Thank you. This is the operator. Mr. Agarwal, may we request that you return to the question queue for follow-up questions. The next question is from the line of Sunil Kothari from Unique Investments. Please go ahead.
Thanks for the opportunity, sir. Hope everyone is healthy and safe at Rane Group. Sir, my question is on Rane Madras latest standalone quarterly results and regarding the December quarterly numbers. So there is a wide variation in operating EBITDA margin. I understand raw material has dented this, one of the reasons. Other expense also has changed so much in terms of from December to March. So, at least broadly, if you can, explain us this margin, EBITDA margin, which normally we were able to achieve 10 plus, 10, 11, 12 something, suddenly fallen to 6, 6.5. How much time will it take to go back to those numbers? How much time it take to pass on this cost to customers?
No, definitely the material cost has played a significant role, Sunil. And but we will back to back get the increases. That we are very confident. But there is always a lag effect. That is one. And second, also, as you know, since the customer only compensates exactly to the amount of the increase, there is an inherent reduction in the margin. You understand what I'm saying, right? So if you have a material cost of 70 rupees on 100 rupees sale, and if 70 becomes 75 by 105, automatically there's a reduction in the margin. So that is also playing a role in addition to the absolute increase. The third thing is, of course, we must also understand that many of our employees took a huge sacrifice during last year's Q1, Q2 and most of Q3 by taking salary cuts and all that. So therefore, the Q3, the volumes picked up and many of the salary cuts, etc. were there. Of course, we reinstated many of those things somewhere in the middle of Q3. So, that impact is also fully seen in Q4. Is there anything else?
Sir, my point basically, luckily we are reaching at a really good size in terms of quarterly number 370, 390 crores. There should be benefits of operating leverage also. And if you look at our other company like RBL, we have increased margin in this COVID year also. So is there anything inherently you feel which is not allowing us to get a respectable margin at standalone RML?
Sunil, as I've explained in the past, if everything is fully the inherent profitability of the steering and linkage business, it will only be in that 10% to 12% range. If everything is perfectly aligned, we could reach 12.5%. Otherwise, it will be in that 10-11%. And of course, quarter to quarter there could be differences based on various things that hit us. So I mean, I'm not sure whether comparing with Rane brake lining would be correct, because the nature of the businesses are different, and Rane brake lining has a significant aftermarket exposure compared to Rane Madras. That's because, again, nature of the product. The brake lining friction material aftermarket opportunity is much more than steering.
No, sir, I thought luckily we are getting now a very good exports, international exposure also in Rane Madras because of ball joints and steering joints and all. So I thought there should be improvement in margin. Sir, my last question is, it's a really it will be and it is painful for you also to give so much time, your very key people, to improve this operational efficiency of US subsidiaries. We are losing almost every year 50-60 crore at PBT level. So have you analyzed if suppose any day we take a decision, will this to stop this train, will it cost more than 150 crore, and is it worth taking decision? I'm not asking a very clear answer from you. I understand this, but it is a draining. I think our management ability. It must be giving you stress also. So as an investor, we are feeling so much pain due to this situation. I understand how much it will be troublesome for you. So any thoughts on this?
Right. No, so Sunil, we appreciate your comments and sentiments, and I know you've been a long-term investor, and yes, there is a lot of stress on the system. As I said, on top of a turnaround difficult situation, we were already in COVID, hurt us even more. And therefore in July we will share the plans with you. But I also want to, I think I had shared, last investor call, I think Enam had asked the question whether, we were getting any support from the government of US. And the answer to that question is yes, we are getting support from the US government, and that was not accounted for during last year for, there were some accounting procedures and processes that is involved with the US government. So those supports have not been recognized. But we will share more details during the July quarter.
Fine, sir. My point is just that if as an investor we are ready to with you for this, any hit maybe 150 crore for this, and we come out from this. So that is what I wanted to cover. Thanks a lot, sir. Wish you good luck.
Thank you. The next question is from the line of Manish Goyal from Rane Holdings. Please go ahead.
Yeah, thank you so much, sir. I have few questions. First on Rane TRW, if you can provide revenue breakup between the steerings and the occupant safety for FY21 and FY20, it will be really helpful. And also follow-up question on occupant safety, if you can give a revenue breakup between domestic and exports. This is the first set of questions.
1 second, Manish. So what is it, steering? SGV, sir. Q3 and Q4. Q4. 178 is the total steering revenue in Q4. You wanted Q3 and Q4, is it?
No, sir. I wanted for FY20 and 21. Full year.
Okay.
Full year.
Yeah. Full year, is it?
Yeah. Full year.
Oh, full year. 486 and 451. Yeah.
Sorry, 4?
FY20 was 486.
Okay.
And FY21 is 451.
This is for steering.
Occupant.
Yeah.
And occupant was 602 and 542.
542 in FY21.
Correct. And out of which 348 was the export.
348 crores exports in which year, sir?
21.
And what was it in the previous year?
355.
Okay. Thank you so much. Sir, my second question is on Rane engine valve, sir. It's been again quite challenging for us to see a turnaround over there. So if you can lay out your thoughts as to how do we see going forward for next couple of years on the turnaround of the Rane engine valves.
Yeah. So again, yes, that has also been a difficult problem for us over the last few years. But if you look at the operational performance of that business, there has been improvement, at an operational improvement at an operating level. But unfortunately, the volume has not happened, and therefore, the absorption of fixed costs we are not able to fully absorb the fixed costs. So the operational turnaround plan is continuing, and there are some more initiatives that the company has taken in terms of improving the productivity of the machines. We are also doing some small VRS, etc. So I think a combination of that with the growth in the top line will help. Now, in the top line, in addition to the domestic and export growth, we are also targeting a lot of non-automotive customers for engine valves. And during last year, we have won several new orders for these non-automotive valve application, and some of those will also go into production in the coming year. So there is a conscious target by the management, keeping of course the long-term threat of electric in mind, to also enhance the non-automotive portfolio for engine valves, and we are seeing some early results in that. So ultimately, there is the top line growth coupled with this continued operational improvement is what is going to help the turnaround. It's unfortunate that again in Q1 we have been hit by the COVID, but if the market grows by 12-13%, during this year, the performance of that business will improve.
Okay. And sir, sorry to come back on Rane NSK warranty provision. So you said the product, basically we have rectified the issue. So the product supplies for the rectified product has started from Rane NSK?
Yes. That has happened some time ago.
And so when you said we have taken provisions factoring future liabilities as well, potential future liabilities. So why is it that we are still expecting some more provisions to come in for, say, probably next 6 months?
Yeah, that is because, typically what happens is once the warranty issue can come in a car that is 1 year old, 2 year old, or sometimes 3 year old, etc. Right? So, and we have taken corrections all in the last year. Many changes have been made. So even now it is possible that a customer who has purchased a car in 2019
right,
could suddenly have a problem in the month of July or August, and they will go to the Maruti dealership and the steering will get changed.
So ideally, for such a long, basically this problem which would not have faced by a customer in early part can still come after 2 years or 3 years.
Correct.
But sir, you would have made the provision accordingly, right, sir, in the past as well. So I'm just wondering. So my point is that in next 6 months, do we expect the quantum of provision to be significant, what we have seen in Q4, or it would be provisions would be probably a smaller amount?
So as I said, that's why I said, Manish, that we need another 6 months to answer that question. We believe all actions have been taken and we have provided for the future. But however, we need 6 months more time to see the effect of these changes in the market before we can conclude. So that's why in my opening remarks I said we need another 6 months.
Thank you. Mr. Goel, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Pankaj Prasul, individual investor. Please go ahead.
Good afternoon, sir. My question is on the occupant safety side, especially on the airbag side. So what kind of revenue we are making right now in the airbag side, and what kind of margin we are making? And since from 1st April 2021, The second airbag is mandatory in all the passenger vehicle. I believe in the commercial vehicle also. So, post scrappage policy, what kind of overall market you see in next 3, 4, 5 years, and what kind of market share we have?
Yeah. The airbag sales for last year was about 240 crores, all the airbag related business. Yes, and the legislation for the passenger airbag is also kicked in. But the impact of that will be not that significant, because even before the legislation came in, almost 90% of the cars that were being sold was being already sold with the passenger car airbag. While it was not mandatory, the OEMs were selling it as a standard package, and 90% of the customers were buying it that way. So that impact won't be significant. And just to clarify, there is no regulation as yet for airbags on commercial vehicle. So the commercial vehicle airbag sales is almost zero. So and there is no immediate regulation that we are seeing also.
What kind of margin we are making there, sir? And do we believe that we are going to capture much more market share in India?
So we don't have the airbag margin alone. Overall, it's about 7 to 8%. EBITDA margin.
Okay. And where do we stand in terms of market positioning? Number 1, number 2, number 3?
For airbags?
Yeah, in terms of airbags.
Yeah, we will probably be number 3 today in the market.
Okay.
That's largely because our presence in Maruti and Hyundai is limited.
Okay. So do we see in future we will get into there?
Yes. We have already got an entry for seat belts in Maruti, and we have also made some progress in Hyundai.
Okay. Now, my next question on the Rane engine one. Do we see that within next year or next 24 months we will make it to turn around?
That is the intent. But I also, as I said earlier, market also plays a role in terms of how quickly the economy revives and the growth that we see in all the vehicle segments. That will also play an important role.
Okay. And can you throw some light on the Rane T4U business? How do you see future of those verticals?
Yeah. So obviously it is an area where there are a lot of opportunities. The connected space, trying to offer telematics and IoT-based solution. But at the same time, COVID has had a significant impact on that business. And we also, one particular customer contract that we had came to an end, and that contract, it was not a renewable type of contract. It was one contract, but that could have been renewed, but finally the customer decided that they won't do it. So as a result, there has been a decrease in the top line, both due to COVID and this. We are still optimistic of growing this business, but there is a lot of volatility in these kind of connected telematics type of solution. So it's difficult to give a long-term prediction on how exactly the growth of the business will be. It is a little different from our core manufacturing business. But having said that, we believe there is opportunity, and in the next 12 months we'll have some clarity on the future direction of the business and how much capital we want to allocate towards this, etc.
Thank you. The next question is from the line of Naresh Ranka, individual investor. Please go ahead.
Hello. Yeah, good afternoon, sir. Thank you for giving me an opportunity. So my question in regard to Rane NSK steering. So we actually had a warranty provision of almost 351 crores from FY19. Sir, last time actually there was a mention that there's been discussion for insurance claim. So are we eligible for claiming insurance for this warranty, sir? Rane NSK?
So, it is a very complex subject and it is still under discussion with, various agencies. So, I'm not able to comment at this time on what is possible or what is not possible.
Okay. Sir, can you also see, because it's been 351 crores provision, at least can you give a figure like how many vehicles we would have done the replacement on? How many, maybe some 1 lakh, 1.5 lakh vehicles we would have done the replacement, sir, the EPS?
If incidentally, my understanding is the provision amount is 320 crores, not...
Okay.
320 crores. Yeah. So this provision will be approximately around 165,000 units.
165,000. So, based on your estimate, like what will be the percentage of fault for which the replacement would have been done, sir? I mean, the percentage of the fault, there would be some estimate, right? These many vehicles would have been at fault. And, or is it like 100% provided for? Any figure on that, sir?
Yeah, so it will be difficult to give an exact number, but it will be in the low single digits, 4%, in that range.
Okay. So, based on the fault, I mean, where you're expecting fault on that percentage, sir? Like we are expecting 2 lakh vehicles fault and we have provided 1,65,000, something like that.
No, as I told you, the 320 crores that have been provided for includes future liabilities. And as I answered to Manish earlier, as of now, this is a total amount. So this is at 160,000. So today, it's not as though 160,000 vehicles have been replaced. The provision is for 160,000 vehicles. Now, whether this will remain at 160 permanently or not, I think only in about 6 months' time, the clarity will emerge.
Oh, okay. So, but 160,000 we have not done the replacement. We have only provided for. Okay.
Correct.
Okay. Sir, one more question regarding to the Rane Light Metal Castings USA. So I know, there's a lot of pain. I guess we've at least made a cash loss of 110 crores. So what is the outlook, sir? Yeah, I'm sure you answered to a lot of people that by July you'll be able to give us a clear indication. So, but what will be the future plan for these subsidiaries, sir? Because it's a big stress to the standalone business of Rane Madras. I'm sure you would have taken a call, and I guess by July you will be giving us, right?
So, as I said, we'll share more details in July.
Okay, no problem, sir. So apart from that, yes, sir, we are happy because we are also the same automobile business. We know the brand Rane, and is one of the well-known brands, and wishing you all the best, sir. Thank you.
Thank you.
Yeah.
Thank you. The next question is from the line of Rajkumar V, individual investor. Please go ahead.
Yeah, good afternoon, sir. Sir, I have a couple of questions. The first question is on the Rane Madras operating margin. I was going to the CRISIL, the current credit rating report which CRISIL has issued for RML. So they are talking about the margin suppression or margin pressure not only due to the overseas subsidiary. They're also talking about the domestic die casting division is also not performing well for Rane Madras, and that is also putting pressure on the margins. So if you could please give color that this is not only the raw material issue and this is also creating pressure on the margins for RML. Is that a correct statement?
Yeah. So definitely, as we have been communicating in multiple investor calls in the past 2 years. The die casting business of RML India, the 2 plants that we have in Hyderabad, have been going through a very difficult time because we made a large investment in 2016-17, and based on some confirmed orders that we received on an export customer, and finally we ended up that export customer, the volume turned out to be something like 20% of what they forecast. So therefore there was a significant impact, and we could not immediately utilize that capacity for other customers. So it has taken us about 3 years, but as I've mentioned in the past calls, we believe that the worst is behind us for that business because a lot of new business has been booked in the last 12 to 15 months, and the sales is steadily improving from Q4 of last financial year. And of course, Q1 of this year, there is again a COVID impact, but all the orders are in place, and we think that going forward, we will see margin improvement.
And what was the number for the last quarter, sir? Do you have was it a positive break-even number or just still a loss for Q4?
The Q4 of
the current year, 2021.
Is it correct? What is this then? That one? No. What is 380 and 398? No, that's standalone. Oh, sorry. So So Q3 was about 42 crores and Q4 was about 32 crores.
Sorry, sir, this is the bottom line number you are reading out?
No, top line.
Top line. And how about the bottom line, sir?
So the margin in Q3 was about 8.5%. In Q4 was about 14%.
Okay, so it is actually turned around then. It is no longer a drag on the margins of RML, right?
Yeah, that's what, as I said, going for, I think the worst is behind us for that business.
Okay. And the reason why CRISIL is highlighting this, this is a current report, so this is for May 21 they have highlighted. So, did they not have this information at the time?
If you look at last year's full year performance, definitely that has impacted the RML negatively. So that is why CRISIL must have made that observation.
Okay. Sir, with this division turning around, so we can expect your operating margins to move to 12 to 13%, right? Given the raw material will be a pass-through at some stage, we catch up on the pricing.
So you're asking for the die casting business?
No, overall for RML.
No, I said overall, very difficult to give a number, but as I said, the inherent, it can be anywhere in the 10 to 12% band.
Yeah. So, sir, the reason is, if you see the guys like Mahindra, CIA and all, they are already doing 12 to 13 and they have aspirations to do 15. So, I was just wondering with Rane kind of a pedigree, you should be ahead of those people. So that is the reason I'm asking these questions.
Understand.
Yeah. So the second question is on the Rane NSK, given the significant provisioning, so are there any funding requirements? Will Rane be requested to fund further? And also this narrative which you currently said you would wait for 2-quarter performance to see, to wait for NSK to stabilize. So this narrative is kind of new now because the past conference calls, you have been saying that this warranty provision is a thing of the past and it will not impact, the current performances. So if you could please, highlight why you're making this new narrative now.
So as I think, yes, you're right that in the past we thought that the problem will be contained to a smaller number, but it turned out to be bigger than what anyone had anticipated. See, we go largely by the guidance given by the NSK experts. They do an estimation based on the number of defects that are coming in the market, etc. So, therefore, there was an unanticipated, the analysis that was done did not comprehensively cover the full problem. But now we believe we have done that.
Okay. So lastly, I just wanted to know, is there a way you could consolidate all your companies under one umbrella and have a better valuation and also reduce the volatility of your stocks? Because many mutual funds will not even look at, companies which below 1,000 crore market cap. Given that we have multitude companies below 1,000 market cap, it would be better, Rane, to look at merging all of them under one umbrella and have a better valuation. And, you see guys of, lesser experience in the market coming with, higher valuation. And it's very saddening to see Rane with almost 10 decades of history, having a lower valuation in the market.
Your point is noted. I see there are some companies that are joint ventures, so they will always remain standalone entities. But of course, merging everything and having the joint ventures also underneath that is theoretically a possibility. We keep discussing this internally. I'm sure at the appropriate time we will come back.
Thank you. Ladies and gentlemen, we will take the last question from the line of Shyam Shekhar from iThought Advisory. Please go ahead.
Sorry to be repeating what a lot of people have said, but though you have provided 320 crores on NSK and the provisions are accelerating, I am not sure how you are saying that you feel that you have provided for the worst. Somehow that is not convincing, because the provisions are accelerating and you are still saying you have provided for the worst. It would help if you actually say how much of warranties you have paid out. You have actually provided for 320 crores, but can you give a number how much has been paid out till now, so that we know what is the number that you have in cushion or in kind of a reserve to pay out into the future. I think the two numbers will give a lot more clarity than all the questions that we have been hearing on this issue.
Yeah. So as of March, about 215 crores has been paid out.
Okay. And how do you say that you have provided for the worst?
As I said, based on NSK experts, they have given an estimation, and we go by that estimation. As you know, this is a 51% NSK-owned company, and their experts provide us an estimation, and we go by that.
So can we emphatically say that the worst is over?
I think I repeated. I think 6 months from now, we can be in a better position to answer. We believe we have taken all the actions to put this problem to rest.
Thank you. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to the management for closing comments.
So, we appreciate all the comments. Obviously, this Q4 has been a very difficult one for us. While I think, as someone mentioned, at an operations level, while we saw improvements on many fronts, unfortunately, we have had some significant setbacks from in terms of booking certain things in the accounts, like the warranty provision, the impairment of the US business. I think the small impairment we had to take in Rane Holdings for the T4U investment. I think it's a combination of certain things that have impacted those business negatively, and COVID, etc. So we decided that we will take some of these hard decisions. It's been a difficult quarter for us, but I'm hopeful that with the market improving and some of these provisions that have been made, hopefully the future will look better. Thank you. Again.
No, thank you. Please stay safe. Thank you.
Thank you. Ladies and gentlemen, on behalf of Rane Group, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.